There are some who believe inflation is still a real threat to the British economy. Haig Bathgate is one of them, the investment director of wealth managers Turcan Connell. He's with us now live from Edinburgh. Haig Bathgate, thank you very much indeed for joining us. So inflation is amazingly, or should I say, it's stubbornly high, and expecting that to be the case for the rest of the year.
Yeah, absolutely. I mean, it doesn't really come as a surprise. We've been positioned for inflation over the past year, and that's predicated on the simple fact that we've had such a large currency depreciation. And if you look at how long that takes to feed through to the real economy, if you're a retailer and you're importing things, you have general hedges in place, and therefore it's not a surprise that we continue to see inflation supposedly surprising in the upside.
Do you think it'll surprise on the upside today?
Yeah, I think so. I mean, it's going to be a fairly volatile path, but we're positioned for inflation, and we think the currency's depreciated around about 30% against a world basket of major currencies from the peak, and that's going to have a very profound impact on the cost of things, given that we import more than we export, and we're very heavily dependent on imports in our consumption basket.
Does this bring a rate hike closer?
Well, I think so, but I think the Bank of England have got a very difficult job to do, because the simple point is that lending margins are still very high, and whilst they acknowledge that, in their view, the inflation pressures are short term, if we increase interest rates to any meaningful extent at the moment, it's likely to cripple the consumer and corporates, because lending rates will rise very appreciably.
Let's just move now to what we've got to tomorrow. We've got the budget, of course. Let's look ahead to that. What's going to happen, and what's the Chancellor going to say?
Well, I'm not sure. I mean, it's going to be quite difficult to see exactly what's going to happen. I would imagine there won't be any major changes in terms of cutting public spending. But if you look at it this year, or in the coming fiscal year, we've got £190 billion worth of debt to be issued. And lots of people are commentating that that's less than we expected, but the simple fact is that last year we had quantitative easing offsetting the gilt issuance, so we had £200 billion worth of quantitative easing, meaning that there was only net issuance of £25 billion worth of gilts. We're now faced with the fact that we're going to have to issue £190 billion worth of gilts in the coming year, even on the revised downward figure. And there's going to have to be something in place to soak up that demand. So, we think that one of the policy responses that we'll see as we go into the year is either a continuation of quantitative easing or some kind of scenario where the banks are forced to purchase gilts.
Very quickly, you've got to increase taxes and reduce spending, but when do you do it? That's going to be key, isn't it?
Yeah, and I think it doesn't take a rocket scientist to work out that none of these hard decisions are going to be made until after the election happens. I mean, I would forecast that we'll have another budget very soon after the next election, but I wouldn't expect too much to be said in the forthcoming budget on the 24th. I think it's just a case of do enough to show the rating agencies that you are taking this problem seriously.
Haig Bathgate, thank you very much indeed for joining us there. He's from Turcan Connell, just talking to us about inflationary expectations and looking ahead to that budget tomorrow here in the UK.